You took the example of Lebanon post 2019. I think that's a great example, and also what happened after it, right? That's why you see so many people stacking cash under the mattress. The early version of tokenized assets was purely digital assets. So Bitcoin, for example. Newer forms are tokenized representations of real world assets, right? And so you could buy a Tesla stock, you could buy a T-bill, or you can hold $1, all in the form of a token that can be transferred from wallet to wallet permissionlessly, seamlessly, and faster, cheaper than ever before. Like, why should we, just because we live in a certain country, we're coming from a certain country, not have access to the same financial opportunities or even the same infrastructure to merely protect our money?
Hello, everyone, and welcome back to the show. In 2019, millions of Lebanese people discovered something that they had never imagined. The money they thought was theirs, they owned, wasn't really theirs. Bank balances became just numbers on a screen, withdrawals were restricted, and savings disappeared through inflation and devaluation. It was a monumental shock and still is, but for our guest today, it became kind of a life mission, an inspiration. And today he has founded Sovra, a self-custodial platform that lets users hold digital dollars, earn yield, send money globally, and spend them anywhere, all while keeping control of their own funds at all times. Sovra has recently raised more than $2 million in a pre-seed funding, and I have the pleasure of welcoming Ahmed Wehbi to the show. Hi, Ahmad, and big congratulations on that fantastic news.
Hi, Michelle. Great to be here. Thanks for having me, and thank you.
Looking forward to the conversation. I have so many questions I want to ask you. I'll start with a perhaps simple question, but not so simple for some people. What is money?
Yeah, actually not so simple, but let me try my best. I think money is effort spent in the past, saved for use in the future, right? So if that's one definition. Another definition is that it's a medium of exchange, and essentially what gives something a value and then makes the process of giving something away and then receiving something in exchange easy, right? And so with this one is kind of straightforward, and money's role is realized in the moment. With the role of money as a store of value to preserve effort spent in the past for use in the future, this is where it can get a little bit complicated or tricky depending on how money is handled. But maybe we'll get to that later in the conversation.
For sure. And throughout civilization, we have decided money to be something that we all collectively agreed had value. And also, I guess everybody trusted that that was the money that everybody else was using. So just a quick word. This has been obviously followed by many people in the West as well as in the MENA region. The spectacular and very sad banking collapse of the financial system in Lebanon, the hyperinflation of the local currency, the capital controls. Many people outside Lebanon think that what happened is kind of a Lebanon problem, right? What would you tell these people?
Yeah, I think it's just simply not. It's a problem that was seen in different ways, in different instances across history. Whenever we've had to trust custodians with our money and then not really have the proper checks and balances around, one, how the currency is managed, and two is how access to money, i.e. how we interface with banks or other custodians, is also managed, right? And so in the broader region, in just the last years, we've seen devaluation of more than 90% in Egypt, in Turkey, for example, right? And in Syria. So that's one form of it that has manifested here close to home. In other places of the world, even in the US, which is perceived as one of the most developed economies, we not too long ago had the SVB bank collapse, right, and the depositors being locked out, and it just goes back in history across many, many instances. And so I think the problem is really actually structural. It's wherever we have to trust custodians and hope for the best, is wherever access to money depends on the goodwill of third parties or of custodians. I think embedded in that model, there's a problem there, and most of the times things are okay until they're not. But maybe that's not good enough, because if something will eventually blow up, then it's just a matter of time. And I think we probably need to think about and create better ways of preserving and protecting this people's wealth and people's money.
So yeah, as you said, it's not geographical, it is structural, and history has plenty of examples of similar bank runs. You mentioned SVB in the US in 2023, I think, or 2024. Obviously, if anybody took the time to kind of do a quick search, there's so many examples in the past. But you mentioned building something that can help protect from this structural issue of trust and custodians in money. So for someone hearing about Sovra for the first time, what is it and who is it built for?
Yeah, so Sovra gives you a global dollar account that you own, right? You own means that you have access to it. Sovra does not have access to it. Your access to your money does not depend on your intermediaries, in this case, Sovra giving it to you. It also doesn't even depend on Sovra being around tomorrow, because if anything goes wrong, then you have a backup and your money is protected. That's the core of it. That's why Sovra is called Sovra. Sovra stands for sovereignty, or even the sovereign era, right? So it's trying to essentially build around the principle of financial sovereignty, which means you own your money and you alone own your money. And so that's the core of the architecture. And then on top of this account, beyond the issue of safely storing your money, or solving the issue of safely storing your money, or having access to you alone, it also connects you to a global financial infrastructure, so you can access different functionalities, say earning yield, issuing a debit card so that you can pay with your money, sending across borders for very cheap and for almost instantly in some cases. And so the idea is, beyond access, is to offer a full financial suite to people who are just also often excluded from global financial products.
So would it be fair to say that Sovra's target client is somebody who lives in developing, or let's say less developed countries?
Sovra is for whoever uses money, right, primarily.
Right.
But then I think for me the question becomes, who is Sovra most useful to? Right, and so the idea of Sovra is to be agnostic of borders, of geographies, and give anyone access to the same infrastructure, and sort of level the playing field, where you see people typically in the West have much broader access to financial services, right? So in some sense, by tipping the balance and giving people here in our region, in the MENA region, and the broader emerging markets or developing markets, essentially the same access, then it sort of tilts towards that direction. And I think the MENA region in particular is where I'm from, is where most of the team is from and building for. And so I think also with a financial product, or a product that interfaces with financial infrastructure, it's important to speak the language, solve problems, embed yourself into the daily lives of your customers, of your users. So even though the infrastructure is global, we try to really think about what are the needs of users here in the region, in the MENA region, and how can we best solve them, right?
Okay, so you mentioned it gives you access to a US dollar virtual account. While researching for the episode, I heard you mentioning perhaps at a later stage giving access to people anywhere in the world through tokenized assets, to Treasury bills, to gold, to the stock market. If you don't live, let's say, in the US or in Canada, where I've had the chance to live for a few years, obviously there it's pretty easy to open a trading account through your bank. But if you live in in countries that have less developed banking system, how can you buy some Tesla stock if you wanted to, or how could you invest in yielding treasury bills? So that's almost impossible. Can you talk more?
Yeah, absolutely. Look, I've experienced firsthand the gymnastics that you have to go through. Like you took the example of Lebanon post 2019. I think that's a great example, and also what happened after it, right? I mean, I was caught in the web of it, and then after that, after not having access to my money anymore, I also didn't have any access to any other solutions per se, right? That's why you see so many people stacking cash under the mattress, which is such a primitive way of saving and dealing with money, let's say, just because there
and
is literally
dangerous.
and dangerous, absolutely. Just because there's no other option for the longest time. And we've seen some players come in and solve some parts of the chain, right? You have some payment solutions, you have some maybe investing solutions. You still require a bank account so that you can onboard onto them. You maybe need another residency in some case. I myself, to avoid essentially going back to the same bank that is still holding my money hostage, had to go and get a residency abroad just so I can access a basic basic banking infrastructure. I mean, that's absurd, right? And
That's
so
absurd. Yeah.
the question is why. The question is, does it need to be this way? And you see all of these global financial fintech platforms that claim that they are global, that they're really making things faster, cheaper, more connected, but they're not really truly global. Like when I see something say, global, I'm looking into the list of restrictions and seeing my country and neighboring countries often be restricted, and so for compliance reasons or others. So what's dubbed global is never really truly global, and yeah, that sucks, like why should we, just because we live in a certain country, we're coming from a certain country, not have access to the same financial opportunities or even the same infrastructure to merely protect our money? So that's really what we're trying to solve here, and that's why I love the on-chain world, right? Self-custody as a start, but also crypto assets as assets living on top of this infrastructure. It's because to a certain extent, right, and we keep trying to push the boundaries, they are geography agnostic. You can spin up a wallet no matter where you are. No one's asking, or if you're using decentralized technology, hey, you can't access a wallet just because you're from that. It's true that you won't be able to access a T-bill or a stock unless you KYC from, you perform a know your customer process from a certain country. With the on-chain world, with the decentralized finance world, like, it doesn't matter where you're from. And so the question becomes, how do we bring this technology into the hands of people in a way that's intuitive and usable, and without them having to go through the hoops of learning what can be complex technology at times, right? And so that's really a bit, maybe I strayed a bit away from the question, but I think one application of that is access to tokenized investment assets. I think now is a wonderful time in history where stocks, commodities, different forms of assets that were typically only restricted to people living in certain geographies, as you said, are now coming on chain in a tokenized form. And so the early version of tokenized assets was purely digital assets. So Bitcoin, for example, it does not represent a real world asset. Newer forms are tokenized representations of real world assets, right? And so you could buy a Tesla stock, you could buy a T-bill, or you can hold $1, all in the form of a token that can be transferred from wallet to wallet permissionlessly, seamlessly, and faster, cheaper than ever before, right? And I think the biggest winners of such technology will be people who have typically historically been excluded, and that's us here living in the region, I would say.
Okay. So you mentioned, obviously, you touched on the regulatory aspect, you touched on the user experience aspect as well, and I'm going to ask you about that. But just when you were explaining what Sovra was, you did say that it's a way to remove trust. So in traditional finance, the users have to trust the bank, that they have their money, that they will allow them to use their money. And nobody really thought about that or thinks about that until something blows up. Same for crypto companies. They kind of end up asking their users to trust them instead, that they will release their assets whenever the users need them. So how does Sovra remove the need for trust altogether, or how do you minimize it?
I think minimize is the key word, because I have not come across a fully trustless system, right? But essentially what we do is we minimize reliance on custodians, and we minimize your users' interactions with what I perceive to be fragile infrastructure. And so I'll give you an example. Typically, when you use a financial application, or you use a bank, or you essentially deposit anywhere with any infrastructure that's custodial, you're giving away custody of your funds to that third party, right? And you're hoping for the best, right? If anything goes wrong with a bank, or with an investment platform that you're using that is custodial, or any such infrastructure, then good luck. Your money is gone, or your access to it is at least restricted. And so you're dependent on the health of that partner, at best, and maybe also dependent on them allowing you access to what is rightfully yours, right? And that's the problem I see with custodians specifically. And so I think if we were to, the question becomes, do we need them? Like, what role are they playing, right? And historically, they've played a role, because whenever you wanted to, we've seen structures that are cooperative-like structures. We've seen villages kind of pool money together and give it to whoever is needed. We've had the concept of al-jam'iyya, right, in Lebanon, jam'iyya in Egypt, right? So these structures have existed, but they don't scale. And so then when someone wants to borrow from someone that they don't know, or if someone wants to essentially transact with someone else beyond their circle of who they know, then they sort of need that higher institution that preserves the trust across the system, right? Well, today we've essentially evolved into a higher structure where technology plays this part of ensuring trust, where you actually don't need the custodian anymore to perform the same functions that these custodians were needed for. For example, the mere act of holding your money. Well, now you can hold your money on chain, on a blockchain address that is yours and exclusively yours. And insofar as you have good hygiene when it comes to key management, only you can access your funds. And so you don't need that custodian to be holding the money for you. The question is no longer, hey, is it cash in a safe or under the mattress at home, or do I go to the bank? There's this third better solution that allows you to do it more efficiently, more effectively even, right? And so that's the base layer of custody. And even beyond that, right, when it comes to transacting with others, performing, borrowing, lending, performing these functions that banks typically facilitate, technology is playing another role there through smart contracts and other technology that allows you to essentially deal with anyone around the world, even if you don't know them, without needing to trust them, and far more efficiently than you would typically through this legacy infrastructure.
It makes me think of, just like everybody talks about how AI is eliminating jobs, or it will eliminate jobs in the future. It makes me think like technology today enable us to eliminate the third party that was needed. You mentioned when people within a small community knew each other, could provide services to each other, lending, borrowing, etc. And then the centralized entity was needed to expand and scale. So it makes me think that technology also can render some institutions or some services obsolete. But how do you convince, or how do you show to people who are a little bit cautious that the whole blockchain technology is safe? You mentioned the minimum amount of healthy practices, but how do you convince people that what you're offering is safe and is indeed non-custodial?
Look, the first layer is we make it very easy. People are not trying to get on the blockchain. People are trying to access basic financial services that they need, whereas they don't have access to any, right? And then, so the first layer is actually it becoming accessible as a product that solves their needs rather than as a gateway into blockchain or any, it needs to solve a problem that's real for them. And their problem today is not how do I get on the blockchain, is how do I safely store my money and protect it against inflation? How do I pay someone? How do I receive money from my son who's living abroad without paying 5% and waiting in line for hours, right? So you solve real problems, I think, and then you make it easy for people to use it, interact with it, and you make information available for whoever wants it, right? So we try to be as transparent as we physically can by presenting to you everything that is going on, everything that's under the hood, so you can also look at things and make your own decisions, because at the end of the day, we do not advise, we do not sort of lead you to a certain path. We give you the tools and you decide how you want to use them. You're a sovereign individual at the end of the day, right? And so, and as part of making it easy, you probably don't want to be dealing with gas fees and seed phrases and whatnot if you're new to this world. And so we abstract it. You can sign up via Google and you never have to interact with gas because we bring it under the hood and we sponsor it. That's one minor example of how we just make it more familiar to you. As a user, because it will look similar to something that you've used in the past, right? So that's the core of it. And I think also trust comes with time, right?
Yeah.
So I think people will hopefully try it and then see that it works. And over time, as it solves more and more problems, will sort of increase the role that it plays in their lives. And to your last question on like, how do they believe it's actually fully self-custodial? Well, in the spirit of keeping things very transparent, your blockchain address, you can retrieve it, of course, very easily from the app. You can go and paste it into an independent explorer, and you can verify at any point in time that the funds are there and how much exactly do you have, right? And that's something new, right? We're used to giving our custodian our money and then just kind of hope for the best. But that's not the case, because with blockchains, you can independently verify your balance at any point in time.
Right. So you mentioned the Sovra dollar account gives access to yield. Obviously, this is very interesting, very enticing. Everybody wants their money to make more money because of inflation, etc. How can Sovra offer yield if it never holds or custodies the user's funds?
So Sovra doesn't offer yield; it facilitates access to yield.
Okay.
So the yield, which is explained also very in a detailed way in our website for whoever wants to look at it more deeply, the yield comes through decentralized finance, right? So Sovra is connected to leading borrowing and lending platforms that act in a decentralized way with no custodian, right? So effectively, when you are accessing a yield on Sovra, you are lending your money to someone somewhere else in the world who does not need to be on Sovra or is not even on Sovra, who is then borrowing that money and paying interest on that money. And you, as essentially depositor into this vault where the user is borrowing from, you are entitled and you accrue this yield. That's why the yield is also variable, because it depends on supply and demand. When there's a lot of borrowers and not a lot of lenders, the yield is quite high. When it's the other way around, it can go lower, right? And that's essentially this global infrastructure that already, through which billions run, and that is used by institutions and individuals globally. We just make it accessible for people through a click of a button.
Yeah, got it. So on top of offering a dollar account accessible everywhere in the world, also offering the tokenized assets that we mentioned, stocks, treasury bills, etc. So you're offering kind of a pathway to decentralized finance, and that is abstracted through the user experience. So like you could be using Sovra, but not opt into lending for yield.
Absolutely. You can use Sovra because you want to own your money, hold it, only you have access to it, and then you can say issue a debit card and just pay with it without ever accessing yield, right? Or you can use it as an investment platform eventually when these tokenized products go live, right? And so it's a very modular, versatile tool that you choose to use depending on what you're trying to achieve.
Yeah, it sounds very exciting. And just like you said, you care about financial sovereignty, and you offer the tools, and then people can choose to opt in or not. So Sovra is built around the idea of borderless accessibility, borderless money. But I'm sure you know more than me that regulation is not borderless. Companies need to operate within frameworks, etc. How let's say, where is Sovra available, and how did you manage the whole regulatory aspect?
It's a process and will continue to be a process. Sovra essentially acts as the technology layer, and any financial operation that's embedded in the app is conducted through a licensed third party. This is what allows us to be available in 180 plus countries over the world.
Nice.
And selectively available, right? So our availability of different sub-services, such as virtual accounts, such as debit cards, such as bank transfer in and outs, will depend on countries. So it's not available in its full form in 180 countries. It will depend on who the partners who our partners allow. But in terms of having a wallet, having a Sovra account, and then even the parts that interface with decentralized finance, which are the yield, that's available in most countries essentially, and that's because we don't need to depend on licensed financial institutions there, or their restrictions.
Okay. So Sovra obviously evolves around digital dollars. Where does Bitcoin fit into your worldview as, a decentralized, globally accessible, digital, etc.?
Yeah. So just to clarify, when we say digital dollars, it's a bit the term we use for stablecoins, and specifically the stablecoin that we use is USDC. So the USD issued by Circle, which we deem to be the most reliable, essentially issuer of stablecoins, and that's why we integrate them into the platform. So that's a bit on the digital dollar side. Look, on the Bitcoin side, I mean, I think the role it will play in Sovra will grow over time. I think it starts with when we list the ability to invest in tokenized assets, and I think the most interesting asset to essentially offer access to is Bitcoin. And then over time, essentially should play a bigger role, or expected to play a bigger role, right? I think where we come from, personally, I'm a fan of Bitcoin. I'm a fan of the idea of decentralized money. I think it holds far superior properties than the stable coins or digital dollars. The problem is people don't use it for everyday life yet here in the region, right? And Sovra is meant to plug into your life and help you essentially, while minimizing friction of how it integrates to your life, just start to conduct your daily financial life through it, right? And so I think the more people start to adopt Bitcoin, first as an investment asset, and then second as maybe a spending asset, we want to be the first ones that essentially solve that need, right? And we have the infrastructure set up for us to do so.
Great. Okay. I am happy to hear that. And true, Bitcoin today, let's say, does feel like most people use it as a slightly volatile store of value for the long term investment. But there's many initiatives all over the world, potentially in Africa and the global south. You can see them more prevalent just because of the lack of infrastructure and lack of access to dollars. I can see Bitcoin being used as a medium of exchange. So I want to talk about the big news that Sovra has had recently. Congratulations on the pre-seed round, raising more than $2 million in today's environment, i.e. bear market, i.e. geopolitical instability in the region, is a pretty huge achievement. Can you tell us what's next for Sovra in the coming 12 months?
Yeah, absolutely. It's so we have a waitlist live. The product's almost ready. We'll go live very soon, and so it's all about really honing in acquiring users, building trust, raising awareness that this technology exists, that Sovra exists, and starting to play a bigger role in people's, or starting to play a role in people's lives, right? I think the numbers I'm really laser focused on are retention first, because are people who come in staying? Because if so, then they like it and it's really solving a need. If yes, great. How can we get the word out to more? If not, then what should we fix? Right. And so really just honing in on a product that is loved and that people really want to use, and starting to attract this initial user base where it's needed most here in the region is the key priority. I think we've already used also this funding to hire for some key roles in the team. So I'm happy that that's coming together nicely. And that's really the focus right now. I think also, as we talked about earlier, tokenized investments is another frontier that I'm really excited to unlock. So in parallel, the product will just continue to evolve in what it's able to do and what we can offer through it. So that's also on the radar.
Nice. And can you share a word about what was it like to fundraise during pretty much a bear market? How tough, or what kind of challenges did you have to go through?
Yeah, look, I think we were really lucky to find individuals who also are very achieved, that understand really the potential of this technology. In some cases, they used it themselves, or as operators of startups, as investors, or have just seen how it has changed maybe entire countries in Latin America or in other places, right? When it comes to remittances, when it comes to spending, and just understand also that the region is next, and the potential for the region is massive, right? Given all the conditions that we have here, right? And so I think, starting with Farsalus Capital, our leading VC, who specifically focuses on the application of self-custodial technology, of stablecoins, of advancing property rights in emerging markets. For us, that's a fantastic fit with what we are doing. And then also angel investors, Karim Atiyeh, the founder of Ramp, or co-founder of Ramp, Naguib Sawiris, Hisham Al-Faleh, Hani Rashwan. These are all people who have built successful companies and understand that the region is really rich in its potential, right? So I think really happy, really lucky that they saw through the, let's say, the short-term instabilities and understand the longer-term potential of what we are building here.
Well, that sounds very exciting. Everybody says bear markets are for building. You are clearly offering proof for that. So my next question, and I don't want to just focus necessarily on Lebanon per se, but as a Lebanese citizen who's lived in Canada and who recently spent a couple of weeks in Canada, I did not have to touch a single dollar bill. Everything was digital. Whereas in Lebanon, I do use my card very rarely. Like, I'm always carrying cash. I'm always using cash. But the Lebanon, the financial landscape is evolving. We're seeing some legacy banks offering neo banks. Like, one of them is literally calling their product Neo. There is a Wish, WHISH, which is a very popular digital wallet among the Lebanese people. How do you view these developments, and how does their value proposition compare with Sovra's?
Look, I think it's somewhat healthy that something is happening. It's been years since the financial crisis. I wouldn't say it's fully resolved, but I think always after a big crisis there's a period of rebuilding, and I think we're exactly in that period of rebuilding. I think having multiple options is healthy to evaluate kind of what people are being drawn to and what architecture even is superior. I think what we're seeing is, as you mentioned, some players that are addressing some part of the value chain, like payments, for example, but at the same time, you can't really get yield, you can't really get competitive global products. Other parts are playing maybe broader roles, but they're still kind of banks in new clothes, let's say. And so maybe they will have a hard time actually regaining users' trust. I would like to believe that Sovra's architecture of self-custody, which is the core of the product, where you own your money yourself, really speaks to a pain point that people have struggled with, especially in Lebanon, right, where they saw that something can just disappear or can become a number on a screen very, very quickly, right? And so that's our raison d'être. That's why we exist. That's why we're doing what we're doing. But of course, we have a big mountain to climb, and we have to prove ourselves, and time will tell.
Yeah. Okay. Looking 10 years ahead, what is one widely held belief about money that you think people will look back on and find very difficult to believe?
That's a nice question. I think that just the idea of how much was like how big the entire banking structure is, and the idea of like, hey, you know, if you need to borrow, you borrow at somewhere between 5 to 10%, and if you're lending, you know, in the region or in some places you can barely get to 1%, and that entire spread between the borrower and the lender is to fund this massive operation, not to mention the margins that banks essentially necessitate. And for what role? For the role of preserving trust in a system. And whereas one, they maybe historically have not done a very good job at playing this one role, and two, we have now technology that will become so prevalent in 10 years that makes the idea of this role being held in institutions or done manually feel so absurd, right? And I think with the way technology is moving, with the way smart contracts are enabling people in different corners of the world to transact with each other without ever meeting each other, with no single paper signed, will just make this entire infrastructure of contracts, manual, of lawyers, of katib adl, in some cases of judges, of banks preserving collaterals, right? And so it will just seem so foreign in 10 years because we have technology that can just do it in a far more efficient way.
Nice. And this makes me think of Jeff Booth, author of one of my favorite books, most important books in my financial journey, and how he always says that technology is deflationary. And as an engineer myself, I love the idea that all this spread that you mentioned can be optimized. Things can cost less money than what it does today, and you can get still a even better product with minimizing trust. Anyway, this is very exciting. I want to thank you for your time today, and we will follow your news, and I wish you all the best to you and the Sovra team in the coming months and years.
My pleasure. Thanks a lot for having us, Michel. It's great to be here.